Hi there, Clover Health has had a great performance in the last 6 months. As you can see, this stock delivered 74% in just a few months. If you had invested on May 1st, your return would have been over 170%. And this happened because the growth rate has come back. As you probably know, Clover Health Investments Corporation had a great start during that pandemic from 2019 to 2020, where the revenue has increased from a few million, 462 million, to over 3.4 billion. And that's why the stock price went up so much during that time, of course. But then, as you probably know, the growth rate has stopped. They reported in 2023 a decline in the revenue from 3.4 billion to 2 billion. And of course, also the stock price went down during that period. From 2020 to 2023, the stock price has declined a lot. A decline over 80%. But as they reported the results, the growth rate has increased. If you look at the revenue for the first quarter of this year, you can see that total revenue has increased compared to last year, from 321 million to over 346 million. It's not that much, just a small increase, but you also have to look at their net loss. Their net losses have decreased from 72 million to 19 million. And because of this, a small increase in the revenue and a reduction in their losses, the stock price has rebounded. As you can see, year to date, the stock price is up over 80%. Moreover, on top of this, great quarter, good results, not quite great because they still have some losses, they also improved their guidance. Their previous guidance for insurance revenue was that they expected around 1.3 billion in revenue for this year, for the full year 2024. But they increased it just a little to 1.35 billion for the full year of 2024. And also their adjusted EBITDA has increased from a loss to a profit of 10 to 30 million. It's not that much, but when you add all those positive results, increase in the revenue, a reduction in their losses, plus better guidance, the stock price reacts and it goes up, as you can see here. And if they continue to deliver what they promised, or better said, they deliver even more than 1.3 billion revenue and a higher reduction in their losses, then the stock price can continue to go up even more. So the market cap can go from 800 million to more than 1 billion for the next years, only if they report better results in the future. Now, they also have other indicators, for instance, insurance members, and if you look at this number, you can see a decrease from 83,000 to 79,000. But the most important, as you probably know, is their revenue, their insurance revenue. You can see here, insurance revenue, total revenue, and medical cost ratio. The money they earn on the premiums and the money they have to pay for the claims. So their business model is quite simple. They write insurance, the premiums they earn, and they also have to pay the claims. And what's left is their profits, their final profits. So far, as you can see, they haven't achieved profitability. You can also look at their past. For the last 5 years, they had no profits, only losses. Quite huge losses. But if Clover succeeds to deliver a profit, this net loss to turn positive numbers, then the stock price will go up. The market cap can more than double from the current level. Now, You also have to look at the risk, because maybe their claims may be higher in the future and their premiums won't cover the claims, and that will be a problem. Their losses will increase even more. If you look at their balance sheet, you can see that they have unpaid claims worth of over $238 million, and this is quite bad. But they also have enough cash to cover the losses in the short term. In the long term, that will be another story. It depends on the management, how well they can write their policies. So if you look at the cash, you can see that they have cash equivalents over 200 million, short-term investments about 9 million, investment securities over 118 million, so in total over 200 million. Then they have other deposits, plus you have to look at their long-term investment securities, which are close to 100 million. So if you do the math, they have over 400 million in cash. And that's enough to cover their unpaid claims and future losses that may arise. Maybe 1 year will be bad for Clover and their losses will increase. That can also happen. That's why you have to know how to invest in those insurance companies. They are cyclical. Sometimes they are doing well and other times they are doing badly. So you have to be very careful how you invest in those insurance companies. And especially search for a company that is profitable, that has a past history of good profits, and you can rely on their management that next year or over the next 5 years they can achieve profitability. But if you look at Clover Health Corporation, you can see that this is a young company. They had no profits in the past. And you don't know for sure if they can achieve profitability. That's why you have to be very careful of this risk. If the management can handle well the risk, write better policies in the future, earn more premiums and have lower claims, then they'll do well in the future. Their net losses will decrease, they'll report some profits, and the stock price will go up. So, as you can see, the market expects that Clover will become profitable soon. If you believe that, if you like this company, the management, how they operate, then you can also take advantage of this company and put your money to work for you. But if you also want to pay attention to the risk, then you have to research more about the management, the way they write policies, and see the future outlook of this industry, which is not that great, especially insurance. There are just a few companies that can make a profit to make some money after the claims are paid. So you have to be very careful if you want to invest in insurance companies. That's it for this video, and if you have other questions, please let me know in the comments.